It's Thursday, October 30th, and here's everything you may have missed in business and finance yesterday. U.S. stocks were mixed with choppy trading after the Fed meeting. The S&P was just about flat, the NASDAQ was up over 0.5%, and the Dow was down about 0.16%. While the broader market struggled, big tech once again stole the spotlight. NVIDIA and Google were up, helping the cap-weighted S&P 500 outperform its equal-weighted cousin by over 1%. Other winners included industrials, semiconductors, and even some China tech plays. On the flip side, sectors like home builders, packaging, apparel, and railroads lagged behind. As expected, the Federal Reserve cut interest rates by 25 basis points with mixed views among committee members, one favoring a larger cut and another preferring no change. The economy is still growing moderately, and while job gains have slowed, unemployment remains low. The Fed did announce that it will end its balance sheet reduction program, quantitative tightening, on December 1st. Powell struck a hawkish tone in his comments and emphasized that another rate cut in December is far from guaranteed. That uncertainty quickly dropped the market's odds of a December cut from 91% to just 57%. Treasury yields jumped 6 to 11 basis points, the dollar gained strength up 0.6%, while gold edged back above $4,000 per ounce. Bitcoin futures dropped 2.6%, and oil prices rose slightly. Yesterday's only economic data, pending home sales, came in flat for September, missing expectations. On the tariff front, Presidents Trump and Xi had their hotly anticipated meeting. As a result of the meeting, President Trump said tariffs on Chinese imports would be cut to 47% from 57% by reducing the rate of tariffs on fentanyl precursor drugs from 20 to 10%. China agreed to pause export controls on rare earths, and the two sides have also reportedly reached consensus on expanding agricultural trade and will work to resolve other issues like TikTok ownership in the near future. Trump called the meeting amazing and rated it a 12 out of 10. On the earnings front, Caterpillar, Verizon, and CNC were among the winners. Meanwhile, ADP, Visa, and Caesars slipped. Fintech firm Fiserv plunged yesterday, shedding $30 billion in market value after scaling back its full-year outlook and reporting a quarterly earnings miss. Alphabet, Google's parent company, surpassed analysts' Q3 expectations, achieving its first-ever quarter with $100 billion in revenue. Microsoft surpassed analyst expectations. Revenue growth was driven by its cloud business. However, the company saw a significant increase in CapEx, largely due to AI infrastructure. Meta's Q3 earnings showed record revenue, but a significant drop in net income, largely due to a one-time tax charge. Despite the profit miss, key metrics like daily active users and ad revenue grew. Meta also warned of faster growth in CapEx and total expenses in 2026, primarily for AI infrastructure. In other tech news, NVIDIA revealed it has over $500 billion in AI chip revenue backlog through 2026. That helped push its market cap past $5 trillion yesterday. Looking ahead to today, it's quiet on the data front, but all eyes will be on earnings. We have Apple, Amazon, Eli Lilly, MasterCard, and others reporting.